Moving on, the Reserve Bank of India is putting finishing touches to the rules that will govern small banks and is expected to release the final guidelines very soon. CNBC-TV18's Ritu Singh joins in with what can be expected from these. Ritu?
Well, Reema, the Reserve Bank of India said that it would come out with the final guidelines for small and payments back this week itself, and we do expect them to perhaps come out later in the day today. Some of the key changes that we expect the RBI to introduce in these final guidelines are: one, banks may be given a relaxation for 1 year to meet the criteria where they have to have 25% of their total branches in unbanked rural areas. Number two, their capital adequacy ratio could be much higher than that of the existing banks. In fact, we understand it could be as high as 15%, where 7.5% is Tier 1 and 7.5% is Tier 2. Thirdly, they will not be allowed to purchase any portfolios from other banks, which is a regular business for other larger universal banks, nor will they be allowed to invest in credit derivatives. Also, importantly, anything that they finance out of their borrowings from other banks will not be counted as priority sector lending, which they have to maintain at 75% to meet RBI's norms. Even though other banks are allowed to use their lendings to NBFCs and MFIs like these small banks, as PSL, these small finance banks are likely to be exempted also from any interbank borrowing ceilings for a period of up to 3 years to meet their capital requirements. These are some of the key changes in the draft guidelines that we've seen. Let's wait for the final ones. They should be out shortly.